Well, the problem with the turnkey properties, it still takes time and effort. Hello and welcome to Pillars of Wealth Creation, where we talk about creating financial success with a special focus on business and real estate. I'm your host, Todd Dexheimer. Now, let's get to it. Hello and welcome back to Pillars of Wealth Curation. I'm your host, Todd Dexheimer. I got Matt Jones with me today. Matt, how are you doing today?
I'm doing great. How are you doing, Todd?
I'm doing excellent. Excellent. So anything new, Matt, we want to hit on?
I guess I closed on one of my properties to sell. So I've got cash reserves to help me ride through any other challenges that might come our way with COVID-19.
Excellent.
And I am on my last chapter for my book. So really done.
Nice. Love it. Love it. Well, we're looking forward to that coming out, and we're going to have to promote the heck out of it when it does. And it's kind of exciting. Well, maybe once you launch it, I think you and I should just do a whole podcast episode talking about the book, the reason why you did the book, and kind of just highlighting what's in it and why people should get it. And maybe you can even provide our listeners some discount codes. I don't know how you're going to sell it. And I may be forcing your hand at providing some discounts because we haven't talked about that, but we'll see. Maybe we can do something nice for our listeners.
Yeah, that's not a problem. I'm not looking to make a ton of money off of it. Essentially, it's going to be a resource for people exploring real estate investing out.
Cool. Yeah, for me, look, I mean, April turned out to be a pretty good month. And I don't want to spend a ton of time on the whole COVID thing, but April turned out to be a pretty good month. May so far has been really excellent, actually, on several of our properties. As of 2 days ago, let's see, we're recording this on May 13th. 2 days ago was May 11th. We already had exceeded the amount of rents collected the entire month of April on a couple of our properties, which means we're probably we are very much going to exceed April's rents on several properties, if not every property. It's looking like we are ahead on every single property of ours, equal to or ahead. The only equal to means we're at 100% on both. Otherwise we're ahead. So that's really good news. And it's going to, I think, as I look here, unless things change, unless the tenants start doing rent strikes, and they haven't done my buildings yet. So unless things change, we're going to see June and July be really good. And then a lot of question marks start to pop up. So I think it's smart what you just said at the beginning of having ample cash reserves just in case. Because I think there's still a lot of just in case, right? Things are looking good. Multifamily or real estate investors that are in residential overall look pretty dang smart right now. They look like, wow, this is bulletproof. However, let's not count our money before it all comes in, right? Let's not get too excited and be just really smart and diligent until this really clarifies a little bit, until we really know what's going on. Then we can celebrate, but I'm not celebrating yet. I'm thankful for what's happening with my rent collections. I'm very thankful, and I feel a lot of gratitude towards it. Well, Matt, what's the topic today?
Well, today we're going to be talking about active versus passive investing. I see these ads on Facebook from these gurus of making it seem so easy to invest in real estate. So buy a property and then go share on the beach.
That's exactly how it is, right? Buy a couple multifamily properties, just a few years, and you're going to have a portfolio of 1,000 units, and you're going to be retired on the beach, sipping, bite and hanging out, and not have a care in the world. That's exactly how it goes with everybody. And so just do it right. Let's do it. That's it. That's the end of the episode.
I'm going to take that back. I said that maybe in case.
Oh, really? Oh, man.
At least not flankers.
No, you and I must be doing wrong, because that's not my experience either. I think, look, I think a lot of gurus, they're selling. So they're trying to sell a dream to people. And, right, wrong, or whatever, the dream's not really accurate. Now, look, if you want to sit on the beach, sip Mai Tais and play it cool, for me, I need a couple bucks, right? I got my personal residence. We got to pay for the stuff our kids do, and then of course, if you're gonna be vacationing, I don't want to vacation on a shoestring budget. I don't need to blow the bank, but I got to have a good income coming in, and my wife's got to be able to quit her job. So I want to see, probably 200,000, maybe even 300,000 to live comfortably or more than comfortable. I can live a lot less than that. Trust me. And I do. But if I want to, travel and do all that kind of stuff, I probably need some money, right? Eh, So if I want, let's just say I want 300,000. Well, if I'm going to invest truly passively, that means I'm investing in other people's syndications. I'm investing in other deals that are truly passive. That means I probably have to invest around $4 million of capital in order to get that 300,000. Now, if you go, oh, I only need 100,000, well, then do the math and figure it out. You'll probably need, let's call it 1.5 million to invest. So, but the point is, you have to have a lot of capital. Even if you only need 100K, you still need a lot of capital to invest to do it truly private or passively. Now, that's not what most of us do, right? Some of us do that, and some of us create that, and that's awesome. But a lot of us, especially a lot of the listeners, are active and want to be active, and they go, okay, we're going to buy all these apartments, we're going to create this financial freedom. And what I want to talk about is you can create financial freedom. You can do an excellent job. You can build an amazing business. But the one thing you have to realize is that it's active. It's truly active, right? Matt, is your stuff passive? Do you just sit around and do nothing?
Some of it, yes. The syndication I'm part of, I really don't do anything with that. But the rest of the real estate I own is very active. I got tenants calling me. I got overseeing contractors, lots of things involved for my real estate.
Now, the syndication you're involved in, are you a general partner in, or are you a limited partner in?
Limited partner. So I just get emails once in a while from the GP and cash deposit in my bank account once in a while, which is nice.
Yeah. So that's what I'm talking about. That's the passive income that if you want to create that. Now, if you were to want $100,000 of passive income, how much would you have to invest right now? Do you know? Like what kind of, if you just took the check that you're getting, how much money you have invested, could you extrapolate that and tell, or whatever the word is, and figure out, would it be about a million and a half to get 100,000?
Yeah. If you're getting a preferred rate of 7 or 8%, then yeah, it's right in that range.
Yeah. And that's the case for, I think, most people. And I'm not saying like, look, you can't do that. You definitely can. It's just this cash heavy approach. So you got to understand the differences. I personally like doing both. And so I do have some passive investments in syndications, and I do have mostly active investments. And I've got a portfolio of both single family houses and I call them 1 to 4 unit properties. And that's active. We've got our own property management company. Our property management company does showings and all that kind of stuff. And so that takes our effort to make sure those properties are running. I've got a team that I have to, be in charge of. And then the other is I have my larger portfolio. And again, that's active. And that I have to do the asset management and find the properties and all that kind of stuff. And I'm continuing to grow that. And I have to deal with investors. And so there's a lot of day-to-day activity that I have to do for both my small portfolio, my big portfolio. And then my passive investments, I do nothing, right? I look at statements here and there. I open some emails, see what I've got, make sure the money got into my account, and that's it. So those are easy. But the rest of it, if you're going to try to build something, it takes a real effort, definitely real effort.
Yeah. When you're getting into real estate, you have to be able to add value to the property. I mean, whether that's you're putting cash because you've got lots of cash in your bank account, or you've got a lot of knowledge and experience that you can add, or if you don't have any of that, then just your time, sweat equity to put into build up.
Yeah, and I hear a lot of people talking about these turnkey properties, right? You go in and buy a turnkey property. Well, the problem with the turnkey properties, it still takes time and effort. And they think, I'm going to be a passive investor and I'm going to buy these turnkey properties and somebody else is going to manage them for me. Well, I've got properties that I never have bought in a turnkey from scratch, but I create turnkey properties, right? So I buy a property, fix it up, renovate it, and then I hire third-party property management companies to do it. And guess what? They're still not passive. Now, is it less active than if I'm managing it myself? Sure. But if you're going to get good results, you're still going to be having to actively talk with the property management company, come up with strategies, make decisions on when you're going to sell, make decisions on what you're going to buy, make decisions on improvement schedules, all that kind of stuff. So there's still plenty of decisions to make. There's still asset management to do. You can't just take your hands off the steering wheel, because then you're going to crash and burn.
Mhm. So no matter where you slice it, you know, real estate in general, it takes work.
Yeah, yeah. And I want to break down also into syndication, because I wanted to hit on that. And I hear a lot of people talking about syndication, how it's the way to go, because you can raise private money, and I agree, it's a great way to go if that's a good fit for you. But what people I think don't realize is now you're running two businesses, right? Um, and maybe even more depending on how you've got your company set up. But your first business is real estate investing, right? And so we have to find the properties, source the deals, get the team put in place, asset manage the property, do all that. Okay, so that's one company. That's your multifamily company. The second company is going to be your syndication. Those are truly true, like in my opinion, different businesses, and they should be treated differently. Now they work together congruently, right? They're very much together, but they're very much different at the same time. So investor relationships are super important and shouldn't be confused with asset management relationships and property management relationships. So those are two different things. You're marketing in two different ways. You're dealing with two totally different types of people. And so you need to make sure that your team is set up to be able to handle both. And that's where I think a lot of people get like, maybe not confused, but they don't really understand or grasp what it takes to do that syndication versus just being an investor. In my opinion, they're two different. Like, you've got to treat them as different businesses. They're both very active.
Yeah, different skill sets involved with those two as well, and different rules and regulations. I mean, on the real estate, you've got real estate rules, and then syndication, it falls under the SEC. So you've got all these securities regulations that you have to follow.
Yeah. Yeah, 100%. I mean, a lot of different nuances between the two. So just something for people to think about as they're looking at, okay, what are my options and how am I going to get into this? There's a lot of different ways to go about real estate investing. There's no right or wrong answer. You just have to decide what's right for you, and can you handle those differences? Dealing with investors has its own challenges. And so are you ready for those challenges? It has its own responsibilities. Are you ready for those responsibilities? I've talked about it before, and how, like, with my own portfolio of properties, it's nice because I've got this own portfolio and I can decide when I want to sell, how long I want to keep these properties, if I want to refinance, and then where that money goes. And so I can decide all those things. I've got nobody to need to talk to about it. I don't have to check in with anybody. I don't even have to check in with my wife. Good thing she doesn't listen to this podcast, because she might disagree. But that's the great thing with my own portfolio, where my syndications, I can't just go and refinance that property and not tell my investors about it before that. This is what the plan is, and here's what we're doing, and here's what's going to go on with the capital. Like, I have to have actually that plan written out before we even enter into the agreement, right? Before we even buy the property, I need that plan. And then if we shift our plan, we need to have very open dialogue. We can't be like, planning at the last minute. Now, there's some things like, hey, if I'm going to go sell that property and I'm making big profits, I don't think any investor is going to get mad at me. But we can't just make these random decisions. I can't decide, hey guys, I'm just going to keep this property for another 10 years. Guess what? Our business, I know our business plan said 5 years, but how about we do 15 now? How's that sound? Like, Sure, can we ask them about it? But if the investors aren't on board, we're going to have to do what's best for the investors and what their wishes are, because we had a business plan set out. We can't just randomly shift it and expect everybody's going to be okay with it.
Yep. Versus if you just have a single family house that you're renting out, I mean, you can do whatever you want with it.
Yep. 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 Well, cool. I don't know. I don't have anything else to talk about. I just wanted to cover those little things. I think the most important part that I wanted to hit on today was just that active versus passive. And I've heard it quite a few times, I guess, recently, about people talking about this. They've created this financial freedom, and they've got this great passive income. They're managing, 150 units themselves. Single families and duplexes and whatever, and they've got this big portfolio, or maybe not even 150, maybe it's 50 units, but they're managing themselves, and they created financial freedom. Now they can do what they want, when they want, where they want, with who they want. I'm going, really? I think you've created a business, and I think you've done an amazing job, and that's awesome, but let's not take our eye off the ball. Make sure that we're still focusing on our business, because that's what you've created, is a business, not a passive investment.
Yep. And like you said earlier, it's not one you can just walk away from.
You can't just walk away from.
It's going to crash and burn.
Yep. Absolutely. Well, cool, Matt. That's all I got. You have a fantastic rest of the day. Make every day Saturday. Hey, thanks so much for listening. I appreciate you being a loyal listener. I would love to have you go on to our Facebook page and subscribe. Give us a thumbs up. Go on to iTunes or wherever you listen and give us a rating and review. Don't forget to subscribe. But your rating and review just helps us push this out to more and more people and continue to grow our audience, and hopefully positively affect a ton of people out there that really need this and want this. So the other thing I've got for you is a free ebook on my website. So go on to venturedproperties.com, and download our free ebook on real estate and on syndication. And I've got some data points in there, some really good stuff for you. So I'd love to have you take a look at that. It's free. I'm not expecting anything from it. And also, look, if you want some help in multifamily, want some help learning, growing, getting your business off the ground, I would love to talk to you about what it would look like to work with me potentially and see if that's a good fit. So you can go to coachwithdex.com and check that out, and we can definitely have a call. Thanks a lot for listening. You make it a fantastic rest of the day. I'll catch you on the next episode.